Well, hey there, everyone. Hope everyone had a great weekend and a great start to the trading week. Rob wanted me to get a video out. He's been traveling, working on some big things for Wealth Charts as Wealth Charts has been growing exponentially. He's just back in town and will be able to put out a video himself tomorrow, likely. But he wanted to get some of the strategies that we've been working on in the active trader room out to you and let you know how we're looking at markets. So let's get right into that with you at this moment. If you take a look at the S&P 500 on a daily candlestick chart, this is the entire year to date. We can see the abrupt turn that happened last week and continued in this week's action. We evidenced the market having that big short covering rally end at the top of that linear regression channel, in the very top end of the upward sloping channel from the bottom of the market so far for the year, June the 17th. And we came down to the center of that longer term downward sloping channel for the year, which is an organic area where a bounce is likely to happen. What we evidenced at that time, and I'll take you into a little more detail of a view on it, is that we were starting to see some of the signals for a durable turn, i.e. the 7-day linear regression yellow was starting to cross above the 14-day blue, and they all got crossed above right in and around there on the 6th of September. Which is a fairly remarkable moment where you've got a durable turn. 2 out of 3 points are in. The resistance break above a retracement line was also very valuable to help us there on the 6th and the 7th in particular. And we've now since then seen the market shoot up. Now, is this bounce going to carry forward? Are we going to be able to see something that is even more exponential? Well, let's backtrack a bit over here and identify why we saw this bounce as a likely outcome and why it could have been outsized and some of the strategies we were employing. So if you go back and take a look at how the dollar was set up into this moment, I'm just going to zoom you in into a daily chart of the dollar. Lots of lines on the screen over here, but focus on the cursor. You can see that the dollar was getting stretched, and right there on the 6th and the 7th, we started to see a transition. And we got that durable turn signal between those 3 trading sessions, the 6th, 7th, and of course the 8th. Since then, we've seen the dollar come down fairly dramatically, and we had an insight that it was likely to. Why? When you take a look at things that get very far away from normal, you can use a volume weighted average price cone like we have here built into my layouts on Wealth Charts, and we evidenced at the end of the month of August we were stretched. But we got really stretched at the very beginning of September, really into the 6th of September. We got to those thick red lines, which are 2 standard deviations away from that volume-weighted average price for the month that we're in. And that was for September. And of course, it corresponded to the very stretch marker for August as well. This implied the dollar was likely to come down, and things on the other side of the dollar had a better chance to go up. And that would include, of course, the S&P 500, which came into the month very stretched to the downside and then had that abrupt turn. Note that we are a little stretched right now coming into the VWAP for the month ending August, coming into pivot resistance levels with some potential upside. And of course, the CPI data tomorrow is going to be watched. If it comes in cooler, we could shoot up temporarily, and very likely would have to form a consolidation pattern before going. But this entire run-up on the SPY that took the SPY effectively from $389 all the way up to about $412, well, the move was actually more outsized on stores of value on the other side of the dollar that were out of equities, i.e. metals. Because as we came into the beginning of this month for silver, it had been lambasted on the way down. It was pushed down to the point of being so tarnished it didn't even look like silver. And there was a very abrupt change in that motion for silver, going from about $16 all the way up to about $18 using the SLV ETF to note that. Now, all of this came to a halt last week when we were in live market with members in the active trader room, identifying turning points and looking for long side trades, in particular in precious metals, but also many members looked at things that were stores of value on the other side of the dollar that were not equity but related to, and that would be Bitcoin, which we also saw make a dramatic move up. And of course, many folk in the active trader room, alongside myself, looked at equity options as well, meaning trades on the equity indices and or individual sectors. Biotech was a popular one. Semiconductors was a popular one. Just simply long the Qs or the SPY was also a popular one. But are we a little extended right now? The answer is yes. Are we coming into data that is very market sensitive? Absolutely. Members got to see on Wealth Charts Live this morning some exciting trading from me. I traded silver last week and traded it over the weekend as well. They saw some live exciting trading with some great results this morning live, and they saw some day trading as well on silver alongside that during the day today. But where are we going next? We're coming into a moment where it would behoove a trader to be a little bit more cautious. Now, if we get blast off tomorrow, we would effectively be breaking out above a key retracement area, effectively getting above the 4150s to 4160s, using the September contract as a marker, and that would open the door potentially for us to rise up in towards the 42.25 area. However, if the data comes out hot tomorrow, meaning the CPI comes in warmer than the consensus estimate, well, what happens to the dollar that's been pulled down considerably in the last week? Well, the dollar is at an area where it can have some sort of a bounce. And there's a very inverse correlation between silver and even equities and the dollar. If the dollar does get a push up on a hotter or warmer CPI print, well, the equity market run that we're in right now has a high probability of fizzling out. So using key levels, pivot levels, and of course remarkable levels on the VWAP cone can be helpful alongside key equity indications using some of our other tools. Bottom line for me is if we're seeing the S&P 500 come down tomorrow below the 4090 to 4070 area, which would be around the 407 area for the SPY, well, there's a high probability then we come back down towards 402 to 400 and then evaluate the market to see if that bounce can carry forward from there. All of that exciting trading that folks got to see me do live in the active trader room and of course live on Wealth Charts today are strategies that I'm going to be expounding on during the next Wealth 365 Summit, which is coming up shortly. If you'd like to join me there to learn a lot more about how I see the market, how Rob sees the market, how we're looking and trading these markets, feel free to join me live at the Wealth 365 Summit. Simply go to wealth365.com/Ziad-Jasani or simply click the link at the end of this video or in your emailer, and we're looking forward to seeing you at the next Wealth 365 Summit for some great insight on markets, our outlook into the back end of the year, how we're looking to finish 2022 strong, and of course, all of the navigation tools and tactics we utilize day in and day out. Thanks for watching. Have an incredible rest of your day. We'll see you at the next video.